What's up, guys? So today I'm talking five different investment vehicles on how you can use your money to make more money and what you're supposed to do with your like extra money that you want to like have it grow. And we're gonna be talking crypto, stocks, real estate, sports betting, and accelerated savings accounts. So let's start off. Let's talk about like the accelerated savings account. So this is where I keep most of my money nowadays. Just all an accelerated savings account that pays me back like 4.75% per year. So this is something you can do if you just got like a good amount of money and you want it to start paying you an interest every month. So basically I'll get like 100 like $50 every month from Citi, and they'll just add it to my account just because I have the money in the account. So all you have to do is just have the money in the accelerated savings account. The thing is, like, you can't actually directly access the money. Like, it's hard to you can't really get like a debit card for your accelerated savings account. You can pull money out of ATM or you can transfer it to your other bank, but it's kind of hard to use the money directly from there. But like, I mean, it's just like a way to kind of protect my money and just make sure I'm making like more money every month. The thing is, the downsides are you have to keep your money in this account, and then also it doesn't pay you that much. Like 4.75% a year is like less than half a percent a month. So you're getting like less than half percent back each month, which is it's like it's still good. It's better than nothing, but there could be better ways to like make money faster. But the thing is, it is safe. Like you're not gonna like lose your money. So that's the first option. So like I'd recommend this to anyone with like a good amount of money. Like if you don't have over like 10K, then you probably just don't even want to bother with this. You're not gonna get paid that much out of the interest. So you might want to look into other options. But crypto. So we got crypto. That's another option. The problem with crypto is if you're using Coinbase like most people do, I don't really know how to trade crypto other than Coinbase, but I'm sure there are other ways, but Coinbase is like a reliable one that they probably won't go under. So say we're using Coinbase. The problem is when you're buying crypto, they're taking like 3.5% like off the rip. Like when you're buying it, they'll like raise the price like 1% on the crypto and like raise it like artificially. Like it doesn't actually cost that much, but like that's just how Coinbase works. And then they'll charge you like a 3% fee on top of that. So you're basically losing like 3.5 to 4% every time you're making an investment in crypto. Unless you got like if you got Coinbase One, I'm pretty sure you can just trade out the cryptos for different cryptos and like say once we have a certain amount of money in Coinbase already, we can kind of just use Coinbase One to just like get free trading and kind of not have to spend that initial like 4% fee when we're just like using the money we already have in Coinbase. But whenever we're putting new money in Coinbase, it's like a 4% fee, which is kind of fucked. Like you're basically starting your investment like with a 4% loss. So um you would just have to be more careful with what you're betting on. And crypto is completely a betting game. Like I've had days where like you'll like put in a bunch of money and then like a few days later it'll drop like 30% in a day and it's like what the fuck crypto. But yeah, you got to be careful with crypto cuz their swings are insane. But like you can make a lot of money with it. Like people have made a lot of money with it. But yeah, the swings are insane. Um it's like it's not a bad idea to have some crypto in your portfolio, but like you got to make sure you're getting in at a bottom. Like a lot of times, especially like right now, it's like really high. You don't want to be participating in crypto until it drops down again. But like once we're in sort of in a recession again, once it's slowing down, once the economy's like slowing down a little bit, and people realize how high the prices are and how high like the market caps are, it'll lower again. But like, yeah, I wouldn't get into crypto now when it's just like super high. It's just super dangerous. I would wait for it to drop. Like eventually it's gonna like get cut in half, I feel like, or get cut like a third of like its current prices. Like Bitcoin's at like 65K or something when I'm recording this. So like eventually it should get lowered, but it kind of depends. Like um crypto is a little bit sketchy, but it has like the highest return rate out of most of these. So do with that what you want, but I would kind of stay away from crypto right now until it lowers down and then invest in coins that you actually know like is a real thing, real project behind it. There's real people behind it. It's got like a functional use, like the crypto coins got a functional use, or it's really popular or whatever. Um, but you got to be careful with crypto, like, because you could lose all your money very easily. And it's like, I've done it before. Like, it's just dropped like a ton in a day. And you're like, what the fuck? But, yeah, so that's another option. We got stocks as well. So, stocks, if you have a Roth IRA, then you're not paying taxes on your money that you're putting in. You put a maximum of $6,000 in your Roth IRA or Roth IRA every year. So that's good. Um, Roth you won't get taxed on, but you can't withdraw the money until you're like 65 or something. You can, but like it'll take a fee out. It'll take like a 15% fee out if you take it out too early. So Roth is a good thing for like retirement funds. So like say you just invest in the S&P right now in your Roth and you take it out when you're retired, then like you're not getting taxed on that at all. So Roth IRA is your best friend if you're into stocks. No fees basically. Um Kind of depends on what site you're on, but I'm using like Schwab right now, Charles Schwab. Um, I was on TD Ameritrade, but they transferred to Schwab. Um, yeah, stocks are a good way to make money, but also you got to look at the cycles, man. Like s- stocks and crypto, you got to like time it well. Like that's the thing. Like you got to time your entries and time your exits. And if you don't have that patience, then you should probably stay away from that. Because like if you're like impatient, you want to pull your money out, or you want to like put money in when it's not a good time to, then you should probably stay away from stocks and crypto. But you kind of just got to get in when it's a bad season. Like right now, everything's really high. Not a good time to get into like hardly anything. But like if you want to invest in like a specific like company, like the good companies are like companies like Adobe or like Amazon, where they're like charging you monthly subscriptions, um, or just making a ton of money. Like you got to be betting on the good companies if you're gonna pick any individual stocks. Like I wouldn't recommend doing individual stocks. I'd just recommend doing an ETF, like a SPY or the VU, like Vanguard, like ETFs. But yeah, I'd be careful with stocks. Like betting on individual stocks is very dangerous. You could get burned pretty easily, especially if it's like not a good company. Like you want to be investing in like really good companies like Google, Tesla, Amazon, like Adobe, like good companies. Like you don't want to be investing in some bullshit companies that are gonna fall under. So yeah, you gotta be careful with that. I feel like business is really like um difficult right now. Like it's getting harder and harder to take people's money away because people have so many different things they can spend their money on. And there's more competition. I feel like a lot of businesses are going to go under in the next 5 years. So definitely be careful with your individual stocks. ETFs are safe. But also you don't want to get in when it's like a high period in the market. You want to get in when it's low. So something to keep in mind. So that's another investment vehicle. Stocks, Roth IRA or Roth IRA. And another one, real estate. So real estate, I don't have much experience. I'm only like 23, so I don't have a house or anything. But I know there's people that like buy apartments. You can buy like an apartment unit and you'll have like maybe like 4 bedrooms in there and you can just like lease out each one on Airbnb or just have your property manager like lease them out for you for like a 10% fee. And you can basically just like buy like an apartment unit and then like for like 300K or something like that and then rent each unit out individually. Like say you got 4 different units, you rent them out each for like 800 a month, 900 a month. You can make like 3,000 a month back, and it's just gonna take like real estate is going to take a long time to actually like recoup your money back. But I mean, it is a good investment, especially if you want to live in a place. Like if you want to get a house and like maybe you got like a guest house or you want to like rent out some of the other rooms. It's not a bad idea. Like real estate when you're renting, when you're just renting out the rooms is probably the way to go. Like get a 4 unit apartment complex. Um, that's not a bad idea. If you're gonna be living in the place and you're just like trying to buy the real estate so you can live there and then eventually sell it, like you want to be paying for it with all cash or just like try to avoid a mortgage at all costs because like the mortgages are what fucks you. Like the interest on the mortgages are insane. Like if you get a 300K mortgage and it's like 20 years, like you might be paying like 400K in interest on it. So you got to be careful with the mortgages. Um, if you're getting real estate, like I would get it more to just like rent out to other people. It's really easy to rent out like your place to people. Like I had like 4 or 5 different Airbnb people just like renting out my like room, and it was super easy to get people. Or you can go on like I forgot what that website is, but like you can go on different places and find people to rent. Like people need a place to live, so it's like it's never gonna run out of like people are always gonna need this. So real estate, that's another option. Sports betting. Sports betting is what I've been doing. So I basically pulled all my money out of crypto. I pulled I got like maybe like I don't know 5K in like stocks, but we're mostly into sports betting. Like I like how it's an instant payout. Like it just takes a day. Like you gotta just wait and get paid the same day. Like it's really fast. You don't have to worry about timing the market. It's more just about like your picks. So like your players that you're betting on, the type of game it's gonna be, and like just using your edges to your advantage. Like any edge you have on the different lines like is gonna help you like multiply money. I think sports betting is like definitely my favorite way of like trying to use an investment vehicle to make more money just because of the instant payout. Don't have to wait on timing. You're just like making a parlay and just like trying to hit them. But yeah, I mean, if you're a bad sports bettor, it's probably a bad idea. But like, you don't have to be that good at it to make money. Like, when you're in stocks and like crypto, you're competing against like giant hedge funds. You're competing against like people with like crazy like math skills on whatever the stock is, and just like paying attention to the news. They hear the news before you. Um, sports betting on the other hand, like you just kind of have to have like at least a 56% hit rate on your bets. Like if you're like a 50-50 sports better on your player props, like you're gonna get burned. You're gonna lose money. But if you're better than 56%, like you're hitting 56% of your guys you're betting on, then you're gonna be in the money. Like you're gonna be break even with 56%. And if you're hitting like 60%, 70% of your bets, then you're gonna be very in the money. So um I like sports betting just as a way to like um just make money like and invest my money. And it's like a daily thing. So I can put in 100 one day, come out with either like 0, 50, 100, 200, 300. Like it kind of depends on the day. But like if you stay consistent with it, you're finding good bets. You're hitting a lot of them. You're hitting like 60%, or you're hitting 65%. It's a good way to like invest your money. Like no jokes. Like you might not think that if you've never like got into sports betting, but like it is a good way to invest your money. Um, just as like a way to make money quick, right? I mean, it's not necessarily like a good way to make money, but like it is it's not a good way to like make all your money. Like you'd rather have like a job, like whatever you got to make money, bring money in, then you like kind of invest like some of the extra into sports betting. Like I wouldn't rely on it as your main source of income type of thing. But it is a good investment vehicle, and I really love sports betting, and that's what I'm planning on doing with my money. So like sports betting and then the accelerated savings account. We're just gonna run that for now until the markets drop. But yeah, guys, that's the different investment vehicles that you can use. And yeah, take care. Peace out. Catch you guys in the next one.